Now adjust the volume control so that the sound can be heard in all parts of the room.
This is the Protect Your Assets podcast.
Mr. Sandman,
You get the idea?
bring me a dream.
It's on the internet.
Make him the cutest that I've ever seen.
Go on.
Give him two lips like
It's like no cheese I've ever
and
tasted.
tell him that his lonesome
Here's the
nights
Sandman.
are over, Sandman.
Welcome to Protect Your Assets. I am David Hollander, your host, and I will be your drill sergeant this entire month as we roll out our New Year's resolution boot camp. It's so great to be with you this morning. I have a great show planned for you today. For those of you just joining us for the first time, welcome. People around here, they call me the Sandman, and that's because I help my listeners sleep well at night by answering their most troubled legal or financial questions, and that's because I've been doing financial advising and practicing law for 30 years. We are live in the studio in downtown Oakland, California. It's a beautiful day. So this entire month we've been helping you get your financial life together, and if you have a business, whether it be a string of gas stations or a Fortune 500 company, today my guest is a business consultant, highly sought after, has helped many companies turn it around. And let's face it, we're going into a recession. It's going to be a tough year. So what can you do to, I don't want to say cut corners, but make smart decisions so your bottom line becomes a better bottom line? If that's something you're concerned about this year, maybe you started to make some changes already, but maybe you just need some help. Well, this morning, my guest and I will be covering things you need to know to keep your business healthy in 2023. Now, let's get started. Well, it was another interesting week on Wall Street. The Dow finished down 2.7%. The S&P was down just about as much, but it came back Friday to finish down 0.7%. NASDAQ up slightly, 0.6%. International index just off about 0.5%. But the oil industry and bonds was where the action was this week. Oil finished up 2.3% to close at 81.73. And bonds up 3.6% for the week. So we had a positive start to the year the last couple of weeks. And then all of a sudden, investor sentiment changed, got a little more mixed. Stocks didn't like what they saw during the week as we saw weaker manufacturing news, U.S. consumer not really showing up. And then you had the labor number on Thursday, which wasn't very good. And all of a sudden stocks didn't like it. So then we have earnings. And earnings so far have been mixed. And estimates from companies are starting to move lower, which means less revenue to companies. And that's why today we're going to be talking about businesses. But backing up, markets have been following earnings this last week for any signals about growth. Because as you remember, the two themes this year we're looking for are growth and inflation. They do go hand in hand because that sets up stagflation, which we want to miss. So about 11% of the S&P 500 companies have reported so far their fourth quarter earnings. And the results, frankly, are quite a mix. They're not where they need to be. So earnings for the quarter so far have fallen overall by about 4% annually, and the first negative growth quarter since 2020 that we've seen. So things are definitely starting to slow down. And so far we've heard from most of the big banks out there. And while many are seeing consumers continue to spend, they're also preparing for a slowdown ahead. And in fact, as part of that, they've increased their reserves. They've laid off a pretty significant portion of their employment. They've lowered wages. They've also cut payoffs, for bonuses and so forth, and made pay adjustments across the board. So you're hearing about this, which is just a sign that they're getting ready for something that's coming. And we had the first large cap technology firm report this past week, Netflix. The company missed earnings, and this was driven largely by currency fluctuations. But overall subscriber growth came in ahead of expectations. And this is what supported the stock and the broader technology sector on Friday. And I'll come to that in a second because I got a really good question from Trey. But before I get there, the big question I've been asked is, are we going to get a soft landing? Because that's really what people are concerned about. Will the Fed get it right? Will the recession that we're going to go into, at least that's my opinion, will it be short or long? And it's all about the soft landing. So what that means is, a definition of a soft landing is inflation falls faster than growth. We're going to talk a lot about that today. Inflation falling faster than growth. This allows the Fed to stop raising rates and do what's called a pivot, where they well, first of all, they'll stop raising rates, and then they should turn around and start lowering rates if the economy looks pretty good. And in doing so, that usually helps the market. But we have to have the facts that support that. And so I'll say overall, inflation is declining. And we did just say this because of companies reporting growth is slowing. But the Fed rhetoric is not changing. It's still pretty harsh. And I expect this February 1st, which is coming up, they are going to hike rates by about 25 basis points. Now, the big question is, will they continue to hike rates or will they back off? Big diversity in that decision so far. So don't just say, well, that's it. No, it may not be it. Because it's not clear to me with what I just saw last week that we're going to have a soft landing. And why is that? Well, Thursday we had the labor number. And remember, I kept talking about that. The labor number has to get up to 300,000 unemployed. If we don't see that number getting up or raising, labor is still tight, expensive. We'll talk more about that. If you're a business, what do you do? How do you continue to grow your business if it's costing you more to stay in business? Great question. And that's what we're seeing when it comes to unemployment numbers. 190. 190 is far off from 300, right? Yes. So that's there. And costs are still high, right? Across the board, you go out and buy stuff, it's still expensive. You want to put a pipe in your ceiling? You want to get a roofer? Good luck, right? I just want some plastic on well, I can't show up. Sorry, I'm busy till March. I'll see you then. What? So we have a problem there, obviously. So I think it's hard to justify the S&P trading right now in the 3,900s. We closed in there Friday. And until there's actual progress on achieving what I'll call a soft landing, I'd be skeptical. And I'd be ready for 5 to 10% pullbacks, which I've been calling on the S&P. It's not over yet. All right. Now, Trey asked me a question because remember last week we were talking about the fundamentals of the S&P. And if you missed any of that, we do a podcast. Go to your favorite podcast, type in Protect Your Assets, and listen to the market segment. It's 5-7 minutes. So Trey asked me this. Trey says, hey, Mr. Sandman, when you talk about technical levels of the S&P, which I'm going to give you in a second, so be patient. For market direction, does it matter that 75% of the constituents are in a bull market and that the laggard tech is holding down the S&P? Should we be looking at other indicators? Thank you, Trey. Okay, well, Trey, that's a great question because you are correct. Measures of market internals, including what I'll call breadth or volume, matters, and it should be monitored. In addition, you're asking me about the percentage of tech in the S&P. Good question. So if we look just at the S&P 500, that's all I'm talking about right now, the trend, at least technically, as I talked about last week, is bearish. That means that we're going to see more down before we see up. That's what that means. And from the surface, it doesn't matter whether the bearish trend is being driven by one sector or style, or if the market weakness is broad across all types of shares when I'm looking at it broadly. We first just want to identify the trend in stocks. Now, to your point, identifying that the stock market as a whole is in a downward trend is one step. From there, I want to look at where the opportunities for capital preservation and growth are within the stock market. So if we look at investment style, I'm going to reiterate that I like value. Value names are decidedly more appealing than growth right now because of where we are in this economy. When I look into sectors, I like consumer staples, I like energy, I like financials, healthcare, industrials, and materials. These all could outperform against the broad S&P 500. And I've talked about that specifically. So if you missed those, go back and listen to market segments from previous weeks. Now, I would avoid right now communication services, consumer discretionary, and technology because I think those will underperform as we continue to go on through what I'm going to call mud. We're slogging through right now. Now, it is important, as you point out, to note that 3 sectors out of 11 that comprise the S&P 500 are underperforming right now: tech, consumer discretionary, and communication services. And like you point out, that accounts for 40%. Think about that. Those 3 out of 11 account for 40% of the S&P 500, while the 6 outperforming sectors only account for 54%. So the dynamic is why I'm saying you're going to see sharp declines here, because this heavier weighted tech-sensitive sector has negative influence on the broader market when things don't go right. Does that make sense? So good question, Trey. Awesome question. Thank you for that. So what are the indicators right now? What are the resistance levels? On the upside, we want to break through 40-20. All right, 40-20, that's the upside resistance. On the downside, it's 38-40. We got close last week, 38-40. And then beyond that, it's 37-20 and then 36-57. All right, so there's your support. When I come back, I think this year is going to be relatively difficult. Therefore, if you have a business, whether you're a small business or a medium-sized or large business, you need to think about your overall business. You've probably made plans, but are those plans going to work? I have a business consultant here with me today, and we will be back to help you make some smart decisions as you get set up to crush it this year. You're listening to Sandman. We will be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to pyaevents.com and signing up for our next free event. That's pyaevents.com. Now, back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I'm David Hollander, also known as the Sandman, and you're listening to Protect Your Assets this morning. And this past week, we saw that a soft landing may or may not happen as the labor market continues to be pretty tough. So if you have a business and you're trying to make a profit this year, the fear of a recession, entering into stagflation, all these sort of business influences that you cannot control, hopefully are on your agenda and you're thinking about. So this morning, as part of our boot camp, I decided to bring in a business consultant, Elijah Pfister, who is my friend and colleague. Good morning. Elijah, how are you?
Thanks for having me.
You're very welcome. So let's talk a little bit about fighting stagflation. If you have a business and you have a product that everybody wants, what do you think? Is stagflation going to be a problem for you?
Probably not. I mean, I think if you're in a situation where you have a really strong brand or you sell and market essentials, probably not a big deal.
You're going to be all right.
You'll be all right. You'll
All
make
right.
it through, yeah.
Now, how about for the rest of us?
For the rest of us.
What does that look like?
Right, exactly. For the rest of us, it's a little bit more challenging, but there are some tools, some things that you can employ in your organization that can help battle stagflation. And to be clear, I don't think we're going to be at 1970 levels stagflation, but certainly I think a lot of founders, CEOs, managers are probably thinking that, growth is going to be limited and costs are going up. So they're feeling the pinch.
Absolutely. So the margin's much tighter, right?
Exactly. And when you're looking at a market that might not develop to the degree that it has in years past, it hurts. So planning for it effectively, I think, is really probably the most benefit to your company. So,
all right. So what are some simple things as a business owner you could do right now to drive more to your bottom line?
absolutely. Well, some of it we're actually already seeing. You mentioned this in your previous section, getting efficient. So you're seeing this in the tech sector already, reducing overheads. You're starting to see some layoffs come through, and you're starting to see that seep into other industries as well. So that's one step. I think another trick is to, it seems a little trite, but it works, is to go small, shrink it. A great analogy is if you had a pound of potato chips that you were selling before for $3, selling for the exact same price, 3/4 of a pound, you're making up a little bit of difference. But I think that can extend to services as well. I mean, these days, you can offer a reduced set of services, limit some of the inputs in terms of costs. And if you market it correctly, you actually might develop some clients that you wouldn't have before. So I think that's one other tool you can use. I think if you pare down your portfolio and offering, I think you saw a lot of this in Q4 of last year, but you're going to see some of that more in early 2023. If you have, say, 100 products or services you're going to market with, taking a look at the winners and the losers and really feeling what makes the most for your bottom line probably makes sense right now.
Now, when you do that, so let's say you spend a lot of, and this becomes somewhat personal as a business owner, right? Sometimes you feel, well, I need to have this particular product just because it makes me feel really good about my vision and what I'm trying to do with my company. But when you really look at it from an economic standpoint, it may not be the right time to sort of go bigger on that, right?
Correct.
So it sounds like what you're saying is more meat and potatoes, get fundamental, do what kind of cranks money in the door there, and just maybe back off on some of those bigger plans right now.
100%. And I think if you are very honest emotionally and financially about the things that drive business,
right,
you'll drop out some of the things that maybe you've been wasting your team's time on, or maybe not wasting, but spreading them a little bit too thin in areas versus areas that really put money to the bottom line.
Now, let's talk about getting your staff focused. So, let's say you have a company, you've got a bunch of folks doing different things. Mm-hmm. How do you get everybody sort of on the right train to understand what you're trying to do and sort of focus on the things that are important that are going to drive your bottom line? What are some things you could do to help people get on the same page, get on the bus together, right?
Certainly. Yeah, I think a lot of groups are probably going through this right now, or they've just gone through it. But I kind of think of it in 6 easy frameworks, right? So I think starting with just big picture. Oftentimes I'll come into an organization where if I was to talk to the founder or the CEO about what the long-term vision of the organization is, they'll say, X, Y, Z, right? And the next question is, does the team feel the same way? Do they understand what the long-term vision of the organization is? And they'll say, absolutely. Yeah, no, and I would say, 5 times out of 10, that's actually not true. So I think bringing in your senior management, your team to be part of that process, understand what the long-term vision and making sure those things are aligned is really effective and fundamental, right? And especially in times where it's challenging, when we're going to go through some potential recession, maybe the first half of this year, maybe longer term. Aligning what your long-term goals are with what you're doing day to day with your team is absolutely fundamental. Mm-hmm. Right?
And so that's a tough situation, right? Because maybe your goal could be to sell your business, maybe it could be to keep it going for another 10 years, et cetera. So again, getting clear about that, I would imagine, is pretty important.
Absolutely, knowing what your timeline is very key. In fact, I spend a lot of time with clients talking about timing, and especially in years like 2023, I think understanding while the goal may not change, what your long-term goal might not change, the time at which it actually takes to get there might need to be adjusted, right? And that is something that is often overlooked or understood, but is fundamental in terms of achieving success, right? If you're a leader, if you're a founder, a CEO, and you're constantly talking about, hey, this year we're going to take over the world, and everybody else is just mired in day-to-day duties trying to get this, next quarter done, there's a disjointment there that needs to be addressed, right? Mm-hmm. So, kind of expanding your horizons might be something that is key to finding long-term success without overwhelming your team.
Now, as it is early in the year, we're looking at unknowns. Because certainly right now it looks like labor is not getting any cheaper. It's certainly not getting more abundant, particularly with the high-skilled folks. So, do you have any suggestions around how, if you're going along, you need a key person here, a key person there? What are some good ways to look at something like that so you don't derail your machine just because all of a sudden you have this pop-up, this expense, right? That's just going to knock you out. So is there anything you can do to sort of get more efficient about that?
Certainly. And I think this is often something that comes up in times like this where managers and leaders will actually put off doing things that will fundamentally help the organization because they think the expense is too high.
Yeah.
And I think now more than ever, we have the opportunity to bring in contract work. I think you can get very creative with your conversations with your existing staff. I mean, you might not even know that you have a star on your team that has an expertise that you really do need to be part of your organization, but you think they might be too expensive or whatever the concern might be. Sitting down with them, having a realistic conversation about what their wants are, what they need. You might find that a key staff member who is about to retire is fine with coming down to 3 days a week. Or if you thought that there was a new initiative that would get you to where you need to be in 12 or 24 months, but you don't have the money to afford it, bring in a contractor so that they can provide the expertise that you need under a short time period. And then you're not dealing with all the overhead and expense that comes with hiring an entire team or a group. Those are just a couple ways to combat that I think now more than ever are available to us.
Mm-hmm. Does it make sense how do you find someone like that? I mean, it's I know you do that.
Certainly.
But I mean, how do you typically find someone who's good at what they do and that you can have faith in that they're going to help you? Because again, a lot of business owners are going along. They realize, oh, this is about to happen. It's sort of like coming up and hitting a wall going 100 miles an hour, right? It's about to hit you. You don't have a lot of time. You got to make a decision, and it should be a right decision because if it's not, it's going to cost a lot. It's going to be painful, and you're going to wish, well, I wish I didn't do that.
Certainly.
So how do you, as a business leader, how should you be thinking about that? What kind of resources? Again, just sort of quickly, how do you do that? What would you do?
Certainly. I think a lot of us find ourselves when we're focused on our businesses every single day, we don't do what we need to do to get down the path long term. And that's just tap our resources. We have networks of individuals and professionals, friends that we can tap into very easily. I hate saying this, but it's actually true. Google is there. You can find plenty of resources on the web these days. And now more than ever, I think, given this gig economy, you can find some really talented people out there in not too short a time. Okay.
All right. And so it sounds like just do it. If you can get a referral, that's also probably pretty good, especially if it's in your aligned business, maybe a friend or something.
Absolutely. I think that's often overlooked as people don't tap their network, the individual network that they have. Go on LinkedIn, start spending some time on there, or just picking up the phone, going through your own directory. You have plenty of people at your fingertips constantly that you probably don't reach out to when you should.
Good point. All right. When we come back, Elijah's here. We're going to talk about this year being challenging. It's going to get more challenging. You may be disconnected from your staff. You may want to know how do you get everybody on the same page? What are some fundamental block and tackling techniques that are sort of basic? We're going to go through that. When we come back, you are listening to Protect Your Assets. We'll be right back.
If you missed any of Protect Your Assets with David Hollander, all you have to do is go to pyaradio.com where you can download or listen to our latest shows for free. Just go to pyaradio.com on your computer or mobile device when it's most convenient for you. That's pyaradio.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am the Sandman. Today we've been talking about your business. This is a challenging year. 2023 is setting up to be a pretty challenging year. And the big question is, will the Fed achieve a soft landing? Or will we be looking at stagflation for a period of time? And if you're a business owner, what can you do about it? How do you get yourself prepared? And what can you do to make sure you have a good year this year and not possibly run out of money and run out of business? These are things that we have to deal with as a business owner. I know it's tough, and so today I brought in Elijah Pfister, who's a business consultant who's worked with many, many companies over the years and has some pretty good ideas about things you should be thinking about right now. So good morning, Elijah. Welcome back.
Morning. Thanks.
You bet. All right. Well, let's get into it before we get started. This is one of our fan favorite parts of our show, the They Say segment, where they say it makes sense to do a SWOT analysis.
are they? What do they know that I don't? And what are they saying this week? Here's David Hollander, the Sandman's answer.
All I know is that I don't know.
All right, so they say you should do a SWOT analysis. Does that stand for the guys in the van with the guns? Elijah, what is that? Should you always do a SWOT analysis if you're in trouble?
I love the setup there. It might sound really basic, but I like the SWOT, actually. Okay. I think...
And let's just be clear, we're not talking about the guys in the van, right?
We're not talking about the guys in the vans with the guns. We have plenty of those.
That was one of my favorite shows growing up as a kid. I really enjoyed that SWAT show. Anyway, let's get back to it. Right.
Yeah, SWOT analysis, no rifles included.
Okay.
You're reviewing your strengths, your weaknesses, your opportunities, and your threats to your organization.
All right, so that's SWOT. I'm sorry, I just want to be basic. That's SWOT for SWOT. Okay, all right. What does that mean? What are you doing?
Yeah, so more or less you're taking a tool that's been around for a while.
Okay.
And it might sound very basic to a lot of managers who have been around for a while, but honestly, it's a great tool to use because it kind of breaks down the communication level between you and your staff, your team, and allows them to bubble up ideas and review certain parts of your organization that might not get touched from day to day, month to month. Yeah. So I think it's a great tool, quite frankly.
Now, if you're a business owner, you've never done this, but you've heard about it, you'd like to do it. Let's say you had 40 employees or 50 employees. What would you do? How would you approach this?
Certainly. I think, employing the efforts of the team and getting that involvement from the team is really important. So depending on how your business is structured, either by business unit or within certain segments of the organization, you can have your managers work with your team members to actually develop their own SWOT analysis of the organization. And then at some point, you're going to want to bring it all together. And I think that's really where the power of something like a SWOT comes in, is getting all of the thoughts out on the page together and making sure that they're well aligned. Because, as senior leadership might be focused on something that's 5 years down the road, you might find out something that your managers are dealing with day to day that you didn't even think about. Right?
Sure.
So again, this is a great tool. It kind of takes down the volume. It provides some support for your team to get forth their ideas or what they're thinking about the organization, and it gets it out on the page in a very structured and supportive manner.
All right. So let's say you've done that. Then what are some other basics? What would you do next after you did something like that?
Right. So we talked about big picture. You can use tools like SWOT. Oftentimes this is where the train comes off the rails, so to speak, is, when you're setting up your goals, oftentimes I'll come into organizations and they'll say, a goal is to grow revenue. Okay, well, what does that look like, right? I really like the terminology I think that's used as SMART, right? So you get very specific, you're measurable, they're achievable, they're realistic, and we talked about timing before as well, right? So SMART goals, right? So if you're hearing from somebody, we want to reduce costs. Okay, well, what does that look like, right? What is specific about you reducing the level of costing for your products or your services? Get really dialed in. Is it measurable? Is it something that's achievable within that year? And given the climate in which we work in right now, is it even possible for somebody to reduce costs if, we're talking about the inputs for those costs are related to transport,
right? That
some operations manager or production manager doesn't even have control over, right? So make it very specific to the things that your team can control, and then it'll have meaning.
So I think a good example, just practical example of that would be, let's say you had a marketing budget that increased quite a bit because of COVID, right? Pre-COVID, things were a certain price. COVID happened. Marketers got a little more creative, said we want to keep business going, so we'll cut costs in half. Then all of a sudden 21 was a great year, great year. And then now people are going into 22 having much higher costs for certain things. Now that we're in 23, those costs may be about the same or rising, and it may not be the most efficient way to do your marketing, right? So is that where you might look at all the different marketing channels you're doing, see which ones getting some reaction but not costing as much, and then devoting more resources towards that? Is that a pretty good example of something like that?
That's a great example. So layering out all the areas, the initiatives that you actually have up for your team to use in 2023, seeing what their costs really are, the true costs, and also their outputs. And that kind of leads us into things like, performance indicators. that you can track along a timeline to figure out whether or not this thing is costing you more and more, if the results are getting you more and more results that benefit your company. And along a certain timeline, you'll be able to determine whether or not this initiative is worth keeping going or not.
Now, you just mentioned something, again, as a business owner. A lot of people that I talk to get into business because their father or they became into a position just because they worked hard. Some of these terms, these are business school terms like KPI, right? I didn't know what a KPI is when I started. I've learned that. But what does that stand for, KPI?
So key performance indicators, right? So you have your goals, right? But getting to your goals might come in quarter timeframes or year-long timeframes. And basically a KPI more or less explains the path along the way in a clear manner for your team. Meaning, if you have a goal, for instance, to reduce costs, figuring out a cost per unit over a time frame is a KPI, and making sure that you're lowering it over a certain time frame. And one key point about a KPI is you don't want to, overwhelm your team with a ton of KPIs that just become meaningless to them. But also you don't want to burden them with the actual that they're just constantly keeping up with the KPIs. You want to keep a couple of them at hand, and you want them to develop over time. A single data point is not enough to change a business strategy. But over time, a trend can develop that is meaningful. So give it some time. Don't overwhelm your team with KPIs, and just keep a couple. You don't need 10.
All right. Oh, that's a good point, because sometimes we get all these great ideas. We want to follow them all down because we think it's the magic bullet, right? But that it's just too much. It's more. I guess that's the shotgun approach, right? Where you just blast it instead of being more focused.
100%.
Yeah. Okay.
Pick a couple, stick to them. Give them some time to develop.
That's great. That's perfect. Actually, I like that. So let's talk about that as far as time goes. How much time do you think you need? I mean, that's another one, right? Where you're spending money on certain things. You don't really know if they're working out. You're starting to see some positive results. You don't really have anybody to talk to. So how much time should you give something? I guess that maybe depends on the industry, but what do you think is kind of typical as an average?
It does, actually. It does take time, develop over time, some view of the businesses that you're developing. But I think companies can actually look internal and see what they've initiated before to give them some sense of how long they should let something develop before they make a decision on it. So you might have historical data within your own organization of products that you've brought to market. And before they really got traction, you can kind of determine whether or not how long this actually takes for a given product. There are industry standards out there. You can talk about the amount of marketing dollars per product that are out there. You can find this sort of these KPIs that are out there, either industry wide or within your organization, and then track to them.
Okay, I like that. Is there anything else that you could do? Let's just say to prepare yourself for what could be coming this year. Is there any other ideas you have as far as something like that?
I mean, I think we've the term that keeps coming up with a lot of leaders that I've been talking to is permacrisis, right?
Oh, okay. Right. Okay.
It doesn't sound lovely, but I think we've inured ourselves to this idea that there's a lot of challenges out there. So we've got COVID left over. We've got long lead times that are coming in. Costs are going up. We talked about that. Yeah. I think something that is a forefront that a lot of managers are looking at right now is keeping talent in place, keeping the right talent in place, and putting your resources behind that expertise that can really benefit your organization and your bottom line.
So in the Bay Area, it's been known that a lot of people want to work from home, right? So you've got a lot of people now leaving their lease spaces, trying that because the staff is asking for it. We want to work from home. What do you think about that as far as allowing your staff to do something like that, given this new post-COVID environment where it is seemingly okay to work from home? I mean, what do you say about that overall?
Right. I would say most clients right now are in the in-between. Right? Hybrid is not perfect. Everybody admits that. Okay. But I don't think you should really throw it out just yet. You talked about it before. We have a really tight labor market. We really need to attract our stars and our talents. We're seeing what's going on with Mr. Musk's organization
Right.
over at Twitter.
Yeah, selling furniture on auction last week.
Yeah.
That was interesting.
Yeah, exactly. So I think there's balance in all things, and I think we're going to walk through this. It's not something you have to jump into. And I've heard from plenty of senior leaders who take the stance that an organization takes with regards to hybrid work as a signal to how creative they are, how open they are to different ideas. So it really is the stance that you take against that sort of work is important. It says something about your organization and your stance on creative, talented, supporting your employees and providing an environment for them that they feel comfortable.
Mm-hmm. Makes a lot of sense. All right. Now, when we come back, we've got one really good idea if you are a local business that you can do to implement now if you find yourself getting in trouble with supply. So we're going to come back and talk about that here in a minute. When we come back, you are listening to the Protect Your Assets Show with David Hollander. I am the Sandman. We'll be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to pyaevents.com and signing up for our next free event. That's pyaevents.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander, also known as the Sandman. And for those of you who run a business, 2023 was looking pretty good a couple weeks ago, and now all of a sudden it looks like the Fed may not achieve a soft landing with labor continuing to get tight, supplies getting unavailable in some cases. As a business owner, what can you do? Well, this morning I brought in an expert in the area, and we've been talking about what you can do to save your business. But before we get back to that, so getting back to it this morning, we've been talking about businesses and what you can do to help your business for 2023, because after all, this is not looking like it's going to be the year that everybody thought it was going to be, unfortunately. But hey, we've got your lifeline here as we continue to help you with your financial goals this year. My guest this morning is Elijah Pfister, and Elijah is a business consultant who's been doing this for many, many years and has helped many, many businesses. And so, Elijah, we were talking during the break about the situation. I love this line. When the line doesn't run because a single component is constantly missing, that gets expensive real quick. What are we talking about there? And what does it mean if you've got things in your product that aren't available and you've been getting them internationally? What are some options you could do today?
Yeah, absolutely. I think you bring up a great use case that a lot of organizations are have been dealing with through the pandemic, but I think it's really shown the light on getting the term that I keep using is close, expensive, and safe. And you see a lot more managers and owners looking more locally for their inputs to their components. They're safer, they're close by. They might be a little bit more expensive. Obviously, we're dealing with a lot of inflationary issues with things that are more expensive, but they're safe, right? And the quote that you just used is a great example where when you're really drilling into the points that cost you more money, lead into increased costs of goods, running the line is just as expensive as the components cost itself if it's manufactured over in China, for instance, or Taiwan or something like that. And I think a lot of organizations are really doing that internal work right now and recognizing that if the line doesn't run, 2 days out of 5 or, half the shifts out of the week, then that leads into their costs and it's not a benefit to them. So a conversation that I was having just a month or two ago with a senior leadership who's in consumer products, they've moved everything to Mexico in terms of their inputs, their components, and here in the United States. And while it might seem a little bit more costly, you talked about this before, inflationary pressures are going up all over the world. So it's not as cheap to do business over in China as it used to be. So those costs have actually come to parity. And in years like 2020 to even 2023, I would say that your cost of goods going into your inputs, going into your production are coming into parity. So you have to do that calculus of whether or not you really need to have things done overseas to really make the margins that you used to.
A good point. It's a great point. Well, hey, I want to thank you for being here today. This has been very informational, very educational. For all of you out there who have a business, if you need help and you've been wondering what you can do, I'd like you to do one thing right now. Sit back, inhale through your nose, exhale through your mouth. and picture a day when you don't have to worry about your business anymore because it runs itself and it produces that profit that you've always dreamed of. Picture a day when you're sitting on a beach with your significant other, enjoying a nice cocktail, looking at the horizon and wondering how you made all this happen. Picture a day when you can relax, travel, and do all the things you've always wanted to do. Well, it starts with just getting some help. You know, like a good team, they need a good coach. And we can be your coach. You can pick up the phone right now. You can get some help. We're here to help you. Pick up this phone right now. Call this number, 866-PROTECT. If you're driving right now, pull over or talk to Siri. Say, hey, call 866-PROTECT and talk to a member of my team right now. We'll set up a call where we can get you some help. Again, 866-PROTECT. I'd like to give a big thanks to the Protect Your Assets team for putting together another great show today. My executive producer and network manager, Kevin Renfer. And of course, all my fabulous producers back there in the studio doing all the hard work. Raph, Phil, Cam, Adrian, thank you guys. Because without my team, I'm just another pretty voice on the radio. Thanks again, everybody. You have been listening to the Protect Your Assets show. I am David Hollander, the Sandman. Go out and make the rest of your life the best of your life.
Investment advisory services are offered through Liberty Wealth Management, a registered investment advisor. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. The strategies mentioned are not suitable for everyone. The information expressed does not consider your specific situation or objectives and may not be appropriate for all investors. Past performance is not indicative of future results. To better understand the risk associated with investing and how it reacts to different market conditions, listeners should always consult with their qualified investment professionals, financial advisors, legal or tax specialists, and conduct their due diligence before making any financial decisions or taking any action. The legal information provided on the air is not intended to substitute for callers hiring their lawyers to advise them about personal legal matters. Investments involve risk and, unless otherwise stated, are not guaranteed. Liberty Group LLC paid for the following program, and the host's views and opinions do not represent those of the station or its ownership. California Life Agent number 048569. Persons engaging the services of one affiliate of Liberty Group LLC companies should be aware that each company is operated separately. You're listening to the Protect Your Assets Radio Network.